Good day Forex trader. Your USD Forex Signal, weekly bullish consolidation above $1.1000. Today's EUR/USD signals. Risk 0.75%. Trades may be entered before 5 p.m. London time today only. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1072, $1.1089, or $1.1142. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to run. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1012 or $1.0956. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote last Monday that we were seeing a weekly bearish and consolidative pattern in the price movement, with new closer support and resistance levels printing. I thought that this pointed towards lower volatility and more ranging price action, with the price likely to remain between $1.1000 and $1.1072 over the day, but if the price could break below the big round number at $1.1000 it would be likely to fall to $1.0955. This was a good call as the range I indicated held during the London session last Monday, with the price then going on to break below $1.1000 the next day and fall to a low very close to $1.0955. The price has recovered as the US dollar has stopped rising over the past few days, except for a few short-term surges, so we see the price remain quite consolidative and choppy with a few key levels close by. We now have a weekly bullish short-term consolidation above the support level at $1.1012, but it is far from clear what direction the price will take today. There are probably better currency pairs or crosses to be trading today, such as some of the Japanese yen crosses like Gbp.jpy, or the USD-JPY pair, as there is more directional movement and volatility in the yen. If you really want to trade EUR/USD today, I think the current picture is most suitable for scalpers looking for a long trade between $1.1000 and $1.1012, or a short trade if the price reaches $1.1072 and makes a short-term pronounced bearish reversal there. Gbp Usd Forex Signal, bulls in control ahead of UK inflation data. The pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.3372. Bullish view. Buy the Gbp USD pair and set a take profit at 1.3372. Add a stop loss at 1.3170. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3160 and a take profit at 1.3100. Add a stop loss at 1.3250. The Gbp USD pair jumped to the highest point since March 4 as the US dollar retreated ahead of the upcoming UK consumer inflation data. The pair is trading at 1.3250, which is about 1.95% above the lowest level this year. UK inflation data. The Bank of England, BO, concluded its two-day meeting last week and sounded increasingly hawkish in a bid to contain the rising inflation. The bank decided to hike interest rates by another 0.25%, pushing its main rate to 0.75%. Still, the bank is in a difficult situation considering that inflation is rising even after its previous rate hikes. That's because the ongoing crisis in Ukraine has led to a sharp jump of most commodity prices. wheat has risen to an all-time high while oil prices are trading at a decade high. Therefore, the bank is in a tough situation because more rate hikes could interfere with the country's economic growth by slowing lending dramatically. The GBP/USD pair will react to the latest consumer inflation data scheduled for Wednesday. Analysts expect data by the Office of National Statistics, ONS, to show that the headline consumer inflation jumped to 5.9% in February. Core CPI, which excludes the volatile food and energy prices, is expected to have increased from 4.4% to 5%. Producer prices are also expected to remain at elevated levels because of the rising commodity prices and part shortages. For example, the PPI input is expected to rise from 13.6% to 13.9% while PPI output rose from 9.9% to 10.1%. The other catalyst for the GBP USD will be the latest statement by the BOE and FOMC governors. Andrew Bailey's remarks will be the first one since the bank decided to hike interest rates. Gbp Usd Forecast. The 4-hour chart shows that the Gbp USD pair continued its bullish trend in the overnight session. It managed to move above the 23.6% Fibonacci retracement level. It also rose above the 25-day and 50-day moving averages. Further, the pair has formed an inverted head and shoulders pattern, which is usually a bullish sign. The MACD has also moved above the neutral level. Therefore, the pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.3372. Aud USD Forex Signal, bullish trend intact, pullback likely. While the overall outlook is bullish, a pullback will likely happen since the pair has formed what looks like a double top pattern. Bearish view. Sell the Aud USD pair and set a take profit at 0.7360. Add a stop loss at 0.7550. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7455 and a take profit at 0.7525. Add a stop loss at 0.7360. The Aud USD pair rose to the highest level since November 4, 2021, even after the hawkish statement by Jerome Powell. It is trading at 0.7436, which is about 6.8% above the lowest level this year. Hawkish Fed chair. The Aud USD pair rose in the overnight session as the US dollar and volatility declined. The VIX, which is a good measure of volatility, declined by over 8% while American equities bounced back. Similarly, cryptocurrencies like Bitcoin and Ethereum also rose. On Monday, Jerome Powell delivered relatively hawkish statements. Addressing a business panel, he said that the bank will be as aggressive as possible in a bid to keep inflation in check. For example, he said that he will be supportive of hiking interest rates by 0.5 percentage point in the next meeting that is scheduled in May. In last week's meeting, the Federal Open Market Committee said that inflation was growing at a faster pace than expected. They also said that the situation will continue because of the rising commodity prices and the fact that supply chains are being disrupted. The Aud USD pair rose likely because analysts expect that the Reserve Bank of Australia, RBA, will likely turn hawkish in the coming meeting. In its February meeting, the bank decided to leave interest rates unchanged and end its QE program. It said that it will maintain rates in the current level until real inflation remained above 2%. Therefore, with its peer banks like the Fed, Bank of Canada, and Bank of England hiking rates, analysts believe that the RBA will also do the same. Besides, Australia's headline inflation remains at elevated levels while the unemployment rate has been in a downward trend. There will be no data from Australia today. The key catalysts will be a statement by Jerome Powell and U.S. new home sales numbers. Aud USD Forecast. The 4-hour chart shows that the Aud USD pair has been in a strong bullish trend in the past few days. And on Tuesday, it managed to move above the key resistance level of 0.7440, which was the highest point this year. It also moved above the 25-day and 50-day exponential moving averages while the MACD has continued rising. Therefore, while the overall outlook is bullish, a pullback will likely happen since the pair has formed what looks like a double top pattern. This could see it retest the support at 0.7360. Still, a move above 0.7450 will mean that bulls have prevailed.